Canada is in trouble, guys. Namaskaram, dosto. Yeah, I even brought a mortgage broker today to address this situation with Christia Freeland.
We are raising the level for insured mortgages from 1 million to 1.5 million.
Guys, have you seen the crazy announcement that she just recently made? And I'll explain to you in a second why it's crazy. Now, let me first introduce Nito. Your girl Nito here. She is a mortgage broker. She's sitting there like she's getting ready for an Indian passport picture. But anyways, now that we have the ice broken, let's talk a little bit about what the hell, guys, is happening. Before we start, let's play a Christian Freeland clip so you know what we are covering right now.
Mr. Speaker, I am so glad to have the chance to talk about housing because there is more good news Canadians should know about. And that is that we have extended to 30 years amortizations for all first-time home buyers. That means more young Canadians can buy that first home and afford that mortgage. We've extended to 30 years amortizations for all new homes. That's to encourage what we know we all need, more homes built faster. But these weak and spiteful conservatives cannot celebrate good news for Canadians because it's bad news for their partisan interests.
Yeah. Okay, guys, so there are two things that she is and has announced. It's actually pretty huge. Now, before we start talking about those things, I want to say that there is something more that Nito here, mortgage broker with DOC Clear Trust Mortgage, has been bugging me for the past days. And she's been saying, Igor, let's make a video about jumbo rate cuts. Nito, what is that jumbo rate cuts? What are you talking about?
So CIBC forecast, they have forecasted that CIBC and TD, I guess, have forecasted that we are going to see jumbo rate cuts, bringing the rate down from 4.25% to 3%, or maybe even lower by December or by next year's spring market. So this is something related to interest rates that we might be able to see, and by next rate cut, it's in October, and some people say that it would be reduced by 25%, 25 points, or even 50 points. That's like a huge jump from where it was, now that we have already achieved our target for inflation, now that it's at 2% and on par with what Bank of Canada has already wanted it to be, and it is where it is.
Yeah, if you look at the baseline inflation right now, it's at 2%. At least that's what they say. When I go to Costco, guys, I still spend $600 now, but this inflation is getting better, and our country, Canada, is one of the most progressive in G7 in cutting down its interest rates. So they're saying inflation rate, inflation is in control, and there it's. Guys, you let me know in the comments down below if you think is anyhow connected to recent events with Pierre Poilievre or Jagmeet Singh or elections upcoming. You let me know in the comments what you think about it. But we see that they're starting to lower down rate cuts. And doing those rate cuts, Nito, okay, so what happens during the rate cuts normally? What does it mean if somebody wants to get a mortgage? What is it for their pre-approvals?
So better rates, people always shop for better rates. Better rates meaning not only your monthly payments are going to be lower, but also you would be approved for a higher purchase price. So let's say, this is just an example, a family who is earlier that was approved only for a condo, now because of lower rates, they can be approved of, let's say, a townhome or a semi-detached, which is huge in terms of affordability of these first-time home buyers entering into the market. Even to stretch that a little bit more, apart from the rates, the government has now recently announced of two major announcements. That is, first-time home buyers are going to have insured mortgages, which is going to be extended not to 25 years as it was before, but now up to 30 years. It's basically going to be in par with what it was in United States. But you will have to renew after your contract ends, after your term ends, whether be it 2 years, 3 years, 5 years, unlike the States.
Yeah, guys, but basically, guys, let me just pretend like I don't know nothing about real estate, even though I work as a realtor with experience in Calgary. Okay, I'm going to just pretend like I'm an average person. But doesn't it mean that I would be paying more interest over the next 5 years and I'll be in debt for the next 30 years? How would it make housing more affordable? Like, I don't understand.
I think it's easier to not take the housing in perspective and take something which is smaller. So let's say a car loan. You go into a showroom or a garage, right? And then you ask for a car loan and they say that, okay, how much would you want to pay as monthly payment? And they divide it over a period of sometimes 5 years or even 7 years, depending on how you think the interest rate would be. But do you really keep on paying for 5 years or 7 years? If you have the money, you pay it off sooner. It's similar to that. It's in real estate. You really want to qualify yourselves, and that's why you stretch your income for not 25 to 30 years. And if you really want, you can have the prepayment privileges, which is, you can prepay, like, let's say 20% of the lump sum or do a lump sum payment. So you essentially have two advantages: that you can pay off your principal loan and not keep on stretching to pay the mortgage for 30 years. It's just simple.
Well, basically, what I understand is from you, when you're buying a car, for example, same thing with the house, but just on a different scale. When you're buying a car, you can finance it for 3 years and your monthly payments would be higher. For 5 years, would be lesser.
Lower.
And 8 years, it's barely anything. So why don't you get this expensive truck now? Same thing with the houses. This way, basically, you're qualified to buy a more expensive property, right? So you're longer in debt,
Right.
but you can qualify for more expensive property. Guys, my favorite loan is 60 years amortization. You know why? Because they'll never see the money back. I'll die in 60 years probably, and they'll never get to see the return of the debt. That's what I
Right. So
like.
just similar from 3 years to 8 years, which you said in terms of a car loan, you can just compare from, let's say, 15-year amortization to 30 years amortization. Yes, you cannot go over 30. If you want to go over 30, you will have to pay a minimum of 20% down payment and get qualified with a B lender, which means that you also have to pay 1% of lending fee. But I think that to keep it very simple, if you compare a car from 3 years to 8 years, yes, for 8 years you pay higher interest, but you see, your payments are going to be lower, which means you can use your income for other things, maybe going on vacation, for buying more groceries, affordable groceries, or maybe buying more clothes, I don't know, or maybe buying more real estate. So,
I think that's what Christia Freeland is basically saying. Housing is getting more affordable. It doesn't mean it's getting cheaper. Just monthly payments are going to be cheaper for you.
and you also don't want your houses that people have invested over the years. About a 70% Canadians have paid off their mortgages, and people don't have mortgages, like, and they don't want their investment to go below than what they have bought for. I mean, nobody would want that, right? And these people who says that they want the housing to be more affordable, let's say that it comes to the rate that the housing is according to their prices, they would say that, okay, now let's just wait and see if housing is going to be given to us for free, right? So such people who are going to be keeping on waiting, they are going to keep on waiting. They are going to always think that there is a bubble. We are always going to think that there is a recession. So irrespective of what the market is going to be, I would say that if you have money, you jump it in the market and at least have a starter home, if not a big home that
Guys, I'm going to say that as a homeowner, I want the market to keep on going up because my home goes up in price. As a tenant, everybody is waiting for a bubble so they can grab something for free. Long story short, what they're trying to say is that you can buy a more expensive home with the bigger amortization period. So interest rates going down means you can buy more property. Basically, with this interest, you can buy a more expensive property. With the longer amortization, you can buy a more expensive property. But okay, now, what is the other thing that has been, guys, if you study the stock markets, there is a lower limit and there is an upper limit, right? So the trend goes in between. So it has been traditionally since 2012, where we had an upper limit for the mortgages, basically saying that if you want to go over 1 million, you have to put 20% down. And now, after December 15th, you don't need 20% down. So now they increased the upper limit. So now, basically, you don't need $300,000 to buy a $1.5 million property. You only need $125,000 down payment, and as Nita would be more qualified to answer on that, in terms of how much money you need, because she's like a principal. She checks your credit score, she makes sure she gets your documents, and me, I do the fun part. I help you to spend your money. I don't have to see your credit history, but I'm just making fun of this mortgage brokers because they're like school principals, always checking out, do you have this document, do you have the document, guys. But in reality, it's a very serious matter. I want to actually answer one of the questions that I had yesterday from one of the clients who was asking me about mortgages, even though I'm a realtor. I had a question saying that, oh, do I have to pay them do like can I do lump sums and stuff like that, or should I just keep that money, or should I just pay off the property sooner? So here's my question for Nito: if you got a mortgage for 30 years amortization, but instead of doing lump sum, can you just save up the money and let's say 5 years on a fixed rate after when renewal comes, and you have enough money? Can you just tell bank, here is the cash for the remaining of the balance, get lost, I don't want to pay anymore 25 years?
Yes, you can do that at the end of the term. You can just say that I'm not renewing, I'm paying off my principal mortgage amount, whichever is the remaining balance, I'm going to pay off that full in cash. But along with that, you also have to do some kind of an extra admin cost to, let's say, remove the name from your title or remove the bank, the lender from the title. You also have to pay some additional, discharge fees. That's discharging the mortgage. So just like car, basically,
Yeah.
right?
So basically, guys, to answer the question yesterday I had is yes, you can pay off your house sooner. And I think it's really, like, you might disagree with me, but I think it's really dumb to keep on giving lump sums in the hope to pay off it sooner. I would probably keep that money invested into something else. And if I really had enough money to pay it off, I would just come to the renewal period and I'll just say, hey, here you go, here's cash. If you have that kind of cash, and I don't need a mortgage and I want to live debt free in Canada. Now, guys, hear me out. So basically, Nitu, how does it impact if they're lowering down? So now, for example, if you don't need to buy, like, you don't need as much of a down payment to buy something over a million now for 1.5 million, and your interest rates are going down, amortization is becoming bigger. How does it impact an average person's like pre-approval for mortgage? So does it mean people can, on average, buy more properties, or
Their purchase price, the budget price would definitely go higher. Now, would that mean that they are going to utilize 100% of the debt ratio? For some people would not be able to take that risk. Some people don't want to take that risk, even if they cannot. So definitely there are going to be more home buyers that's going to be coming into the market than it was before. So that can also stimulate the market in such a way that even with rate cuts, like we've heard all the news, even with rate cuts, there is not much sales that's happening. So people are still sitting in the fence and seeing like what exactly is going to happen next. So definitely right now, with this change by December, there's going to be more people coming into the market, and that might slightly impact the sales price of the houses as well. Because, for example, let's say I'm a seller, I'm selling my home for $1 million, and I'm like, okay, initially I was able to cater a market of 10 buyers, 10 home buyers, and now because of this change, I'll be able to cater to 20 people. Now, why would I keep my $1 million valued property at $1 million or even discounted? Why not I increase it by 20%? I don't know. That's a realtor kind of question. But if it was me, I would do the same thing.
guys, I would just say simple situation. I work with sellers all the time. If I am a seller, I'm a greedy seller. Like, buyers, they want a deal. The sellers also want to make a deal. It's most ridiculous situation on a market when a buyer says, "Well, they can give me a 50,000 discount." And the seller is like, "Hell no, I'm not giving you a 50,000 discount. Oh, but I wrote you a nice love letter. Well, I don't give a damn about your love letter. It's $50,000 out of my pocket that could be sitting in my bank account." So the only point of sellers, and a lot of sellers are just like yourself. Just imagine yourself, you own a home or a car, and you can get more money for it if you wait. So what I see from the seller's point is, with this information coming out, and if I don't have to sell right now, why would I sell? So I wouldn't keep my house in the market, especially with this new opportunity where the housing can appreciate in price. So I, for example, myself right now, in this news, I'm not going to sell. I'm going to be waiting. I'm going to be waiting and waiting, because now, look at it this way. What I see from Nito is the pool of people's pre-approval is going to go up. So there's potentially more buyers. And well, you can blame me for being a homeowner who doesn't want to sell his own home, for being greedy, but I wouldn't be selling it, because what if it goes up in price? What if I wait for 5 years or 10 years or something right now with these changes? I am sure within the next like 5 to 10 years, the prices are going to skyrocket, especially with $1.5 million prices. In Calgary, for example, guys, there's homes sitting at 860 range, close to 900 new homes in areas like Seaton, Mahogany, basically Livingston, Kingston, Evanston, new houses construction. They're sitting at that price range. And people are asking me, Igor, when do you think they're going to start crossing a million? Well, it's difficult because you need $200,000 for a down payment. But now, for $125,000, you sold your home in India, and next thing you know, you're like, hey, you know what? I can buy a luxury house. Why should I be settling down? Over a million, you get luxury real estate. So what's going to happen? My forecast is more people will be buying, first-time home buyers buying luxury real estate with these new rules. They will be able to afford it, and that would push out luxury segment over 1.5 million. Next thing is when there is no luxury houses in that price range left, other houses are going to go up, and eventually even my shitty house is going to go up in price, because all other newer houses are going to be way more expensive. And that's basically a trajectory for the past 3 years on Calgary. First, people bought all the new homes, pushed them to 860 range. Then they're like, my goodness, there are 1970 bungalows in 500 range. Now they push them over 700 range, and now people are buying townhouses and condos. When the market started slowing down and people are waiting on the fences, but what I see is potentially in a short term to mid term potential increased pool of buyers where houses are not really getting built. So what I'm seeing is greedy sellers like myself would be holding on to their properties and not selling them, and potentially buyers, if a crowd starts running and people like to follow. My advice would be right now, guys, is between now and next few years to purchase a property and hold on to it. If you're a seller, I would say probably don't sell it right now, because or buy something and hold on to it, because I think 5-10 years in the long term, it's going to be crazy. The houses in Calgary going to over a million probably.
I would say don't wait until 5 or 7 years, because the main thing here is election is coming. You don't know what is going to be the next rule once the new party takes in charge. You don't know what is going to be right now, is available right now. And once the election comes up, the new party takes over the rule. That rule might not be there. It might disappear right there. Before the Harper rule, this is way back 7 or 8 years before the Harper rule, there was 30-year amortization. People right now are saying, oh, 30-year amortization, that means you're going to be in debt for 30 years. This is not something new. This is something that has been there years before, and it was adjusted to 25 years so that people don't remain in debt back to 25 years. And now we are back to 30 years. So this has happened. The change has happened. So I wouldn't say to wait. Take this opportunity, leverage it as much as possible, but not to another year or more, because you never know what's going to happen.
Yeah, I'll tell you right now in Calgary market, we see a slowdown compared to the last month. It's going towards balanced market, which is great news. And we don't know how long it's going to last. And with what news we know that are coming out, in December, if by December they really go down in rates and they lower down, they increase the amortization, and they also, let you buy more expensive properties, there will be people who are going to jump on it and start buying properties. And I think those people who are going to jump on it first with this long amortization and this low down payments and everything, while it's still available before the prices are started going up, I think they're going to win. But then when the giant crowd is going to start running, I know that's exactly when most people watching this video are going to start buying. When everybody else is going, when there is 20 multiple offers, when you have to pay over the asking price, when we have 10 minutes to choose a house for over $700,000 that you don't have in cash, you have to be going to a bank through let's say your mortgage broker, borrowing that money. You have to make up your mind in 10 minutes and pay a ridiculous amount over the asking price to get it. I think it's kind of stupid, and that's unfortunately most people are actually going to be buying at that time. It just doesn't matter. It doesn't matter how many times what people are saying. People are still going to do the same mistake. I think the smartest people are going to be the ones who are planning somewhere between from now and maybe spring of next year, maybe spring. But after that, guys, for now, I think it might be still a slow market.
Yeah.
I'm hoping for that, especially in Calgary. But after that, I can't guarantee anything. It might be like COVID times. You know what they did in COVID times? That's what they're doing right now. What do you think, Nito? Nito is like, these realtors are crazy. They only want to spend your money. But mortgage brokers, guys, Well, if you need any question about refinance,
We take the bigger picture. We take not only your mortgage payments, but we also consider what you're paying for your car. We also consider what you're paying for your property taxes. So it's a whole picture. So that's why you need mortgage brokers to help you understand that this is your budget. This is what you can afford. Anything over than that, you're going to be basically not being in a comfortable situation to pay, your bills on time, and not even able to take that vacation if you want to. So
yeah.
yeah.
Well, guys, I want to say that I want to say that from my point of view, before I went into real estate, I was always thinking that short-term amortization is better. Me and Nitu, we were actually giving lump sums to TD Bank at some point. You remember?
Mm-hmm.
We were giving some lump sum payments, and only after I went into real estate, I understood how everything works. I just realized how dumb decision that was, because that money could have been invested into another real estate or even in commercial real estate. You could have spent that money invested into stocks. There are so many ways to invest the money.
Well, there are two ways to look into it. Whether you're going to be saving an interest rate, which is basically the lowest interest rate, is for your mortgage, somewhere around 4.5% right now. Are you willing to save that, or are you willing to put into something else that's going to give you 8 to 12% rate of return year after year? I think that's the biggest question. That's what everybody would need to think about it. And when you have that lump sum in cash, would you really pay off your mortgage, which has the lowest interest rate, or would you really invest into something that is going to give you year after year return on investment?
Or
That's for you to think.
you can just save money on that lump sums on something else. Like people would put a lump sum to save money on the interest rates on the house, but then they would go and take a loan to buy an iPhone, or they're going to take a loan to buy a car at a higher interest rate. So why not use that money to pay up the car, let's say for cash if you're buying, so that you're already saving up on the interest rates, because car loans and other loans are higher interest than the mortgage loans. Mortgage, guys, remember this: mortgage is going to be the cheapest money that is supported by the government that you'll ever have in your life. So, if you don't have any other debts and you're trying not to pay even then it's a good thing. But if you are going to pay off mortgage sooner, but you're going to take a car loan, then don't take a car loan instead. That's my solution for this situation. Always pay lesser interest rates.
Right, guys. So let us know in the comments down below, what do you think about this new change, and what do you think the market is going to change with this new rules that's going to take into effect? And you've heard it from us what our thoughts are. We would definitely love to hear what your thoughts are.
Yeah.
So
And
until
leave comments, guys. We need to on more videos, because she she she's not coming up enough on the videos, and I want her to be on more videos so she's more comfortable in front of the camera. Because when we were starting the camera, I looked through the lens and I was like, okay, we are about to take a passport picture here. Anyways, guys, thanks for watching and see you soon.
see you in the next video.
Bye bye.